Welcome to another episode of the Investing with IBD podcast. It's Justin Nielsen here, your host, and it is Wednesday, May 22nd, 2024, and we've got a great show for you today. Of course, joining me as he always does is Arusha Paris. He is a portfolio manager and analyst over at O'Neill Global Advisors, and I should also mention a great person to go to a Pearl Jam concert with. We actually got to have a little live time, our own little we time, but with a lot of other friends. Mike Webster joined us, my wife, my daughter. Arusha brought a friend, and we had 12,000 other folks joining us in the Kia Forum last night. So we survived, though, right, Arusha?
Barely. I mean, my voice is now starting to recover a little bit more, but it was not working this morning, that's for sure.
Yeah. Well, and hey, bringing that same type of enthusiasm as he always does is our special guest, Jim Ropel, Ropel Capital Management founder, and also the creator of the Ropel Report. How you doing, Jim?
Double kick ass, man.
Awesome. Well, we've got a lot to talk about today. I mean, we've got a market. You're going to be able to kind of gauge from Jim's enthusiasm what he feels about the market. And also, we're going to talk about crypto. And look, sometimes you get these short-term snags. So we're going to talk about that and some of the stocks that are on Jim's radar. But Jim, first of all, let's just kind of take that big picture look at the market. I mean, we had that November 1st follow-through day, a nice move from there. I mean, plenty of reason to be bullish as things were just working so well. And then, man, that slice through the 10-week moving average line, after holding the 21-day moving average line for so long, slicing through the 10-week moving average line, that was enough, I think, to shake people in their boots. But man, we just came right back to new highs. What do you make of it?
You know, it's the average market has corrections that necessitate a follow-through day about 4 times per year. An 8% pullback is just so typical and common, right, especially after a monster move. It's kind of funny. Like, I'm catching all this flack on Twitter because I'm so bullish. And I'm like, if you can't sit through an 8% correction, you don't belong in the stock market. Like, that's a joke. By the way, my biggest years ever where I'll have a big opening to the year. And because I have a big opening, the market's overcooked. We have a pullback. And when it comes out of there, I throw the hammer down, and I've had my biggest triple-digit years, identical to how this is setting up right now. So I think not only, first of all, we're going to have more corrections this year that are going to necessitate a follow-through day to reaffirm the uptrend. This is so normal. Like, how can you sit for 4 to 6 beat and raise quarters if you can't sit through a pullback of 8% in the index? That's crazy. I mean, if you're going to sit for 95 weeks, which is the historical length duration of a TML's run, you are going to have
TML being a true market leader.
Yeah. You're going to have to sit through 2, 3, 4 bases at least. So, if you're some kind of short-term guy jumping all over, get it. Like, 8% might be painful. It was painful for me too, but I understand history pretty well.
Yeah. It certainly helps when you've lived through it, right? There's one thing when you've studied it, and for those of you that are new, I highly recommend that you do a lot of studying, really take advantage of, the people that have done analysis before you. Makes a huge difference. But you've been at this for a few decades now, and certainly when you've lived through this and you're like, hey, wait a minute, this looks familiar, right?
Yeah, I mean, here, if the money's so valuable to you that you can't sit through a pullback down to the 50-day, maybe look, your term and your individual style dictates how you're going to work the market. But, Livermore said it's in the sitting. I don't know a single guy who's day traded his way to $1 billion. Not one. Not one. As a matter of fact, most day traders I know are out of the business. The people I know who've made 30 million, 100 million or more are all long-term I mean, when I mean long-term, they catch bull cycles and they catch a couple leaders in it, put good size on, and they're sitting for 9 months to a year, year and a half, over and over and over again. If you catch 1 or 2 or got, 3 of the real monsters in a bull market, you're leveling up thunderously.
Yeah.
So look, I could care less about taking 5 points out of 3,000 shares. That is so. It just I don't care.
Hmm.
I mean,
Yeah, it's moving the needle, right? Well, Arusha, maybe you can show the chart real quick, just so for those that are watching the video at investors.com/podcast, just to give a sense. And Jim, I also wanted to just kind of ask you with this, I mean, it wasn't a major downtrend, right? It didn't last very long, this correction in April. It might have been painful, and it certainly didn't look great, when we were at the bottom. But this was kind of a weird one in terms of we had these follow through days, but the volume was just a little bit shy. So what was kind of the signal to you that, hey, everything's okay?
it made me think it wasn't okay, because when those attempted follow through days were in process through the day, in progress, I'm running all kinds of screens looking for quality merchandise, and I couldn't find anything. And I thought that was a big red flag. But the market just slowly levitated back up. And there was now on the other side of that, there was a ton of double bottoms and shakeout +3 buying opportunities for for the monsters you missed early on. Like
Mhm.
everybody got a second shot at Celsius and ANET and CrowdStrike, and there's a lot of really high quality merchandise. Like if you say, what would Bill own? There were multiple names that were shaken really, really bad and then gave you a second chance to get in them. So
Mhm.
anyway, those attempted follow through days, or days that looked like they might be, I was very suspect of them, because I run screens, looking for merchandise, and I couldn't find much. Apple skewed one of those attempted days. Apple acted beautifully, but it was skewing the index and the volume, and it was on a share repurchase. So, but then on the other side of that, there's a lot of conjecture that everyone's going to have to upgrade their computers due to AI, and computers that are capable of processing AI. So Apple and these hardware manufacturers could go through a whole new hardware cycle, which is
Mhm.
starting to be discussed amongst fund managers.
Yeah,
So anyway,
and we definitely saw that on the server side with Dell and some of those guys, SMCI, having phenomenal moves in kind of anticipation of that. What about you, Arusha? You've been absent from us for a couple days, or a couple weeks. I want to kind of get your thoughts too here on the market and how you've been handling it,
Yeah, well, I
especially as you've been traveling.
that's true. Yeah, it's always very hard to kind of stay up with the market when you are traveling. But really, over the last, I want to say, last couple of weeks, the market has just continued to slowly pull me in. And I think we are in an environment where you're almost the kid in the candy store, where it's not a problem of finding stocks to buy. It's there are too many stocks that are starting to work. And so now it's like, okay, how do I really narrow it down and really focus and try to build more significant positions in some of these stocks? So we are in that type of environment. Of course, we have that power trend. Also, that you guys have been talking about on IBD Live. Mike Webster's been talking about on IBD
Yeah,
Live.
just started on Monday.
Yeah. So it seems like over the last couple of weeks, every day was another reason to get more exposure to the market, become more bullish. And I think, going back to what Jim was talking about earlier, look, if you had a good start to the year and you gave a little bit back during this intermediate pullback, and then all of a sudden you started seeing some of those gains come back into your portfolio, uh, you could even be more aggressive. You could even be potentially on margin if you are starting to make more progress and you're in some of these right stocks.
Hmm. Yeah. So what about you, Jim? Like how aggressive, how quickly, I guess, do you get aggressive in a market like this? Especially again, when you had a nice start to the year, kind of putting you in a nice position. If you were playing poker, you were sitting with some big stacks of chips. Sure, you lost some, but you still have a lot of stacks of chips that you're working with. So how quickly do you get aggressive when you start seeing kind of that turn happen?
So I did something which was pretty cowboyish. If you listen to
Reminded you
Arusha,
of your youth?
very much so. I didn't really think I had it in me anymore. But Arusha and I did this show called War Stories like 4 or
Oh
5
yeah.
years ago.
Yep.
And I talked about one of my worst trades, or one of my worst days ever in history. I went golfing on this rock star golf trip to Bandon Dunes, and I lost a fortune. I mean, I lost like big money, big percentage down. And I just went to band in again last week, right into CPI and PPI. And I'm looking at this, and the market was getting better, and I took off all my hedges, and I ended up being about 150% long in my fund. And I'm like, wait a minute. I remember last time I went on this trip, I was slaughtered. And I'm like, I'm unhedged. We haven't really had a definitive follow-through day, but the stocks I held looked too good.
Yeah.
And I said, well, I'm going to go into these earnings or PPI, CPI unhedged, massively long. And it just, the stocks told me that that's what I should do. And that's the beauty of hedging. When you take your hedge off, you're instantly long the leaders with massive.
Right.
That's interesting. Yeah.
Yeah.
So
it's not about buying them back, potentially at a different price. And, then you have to kind of make that adjustment. It's, you just, okay, now it's unhedged and it's all of that appreciation that you got before. And also, just to your point, when that CPI did come out, I believe that was Wednesday the 15th, and that was the official, follow through day, the one that actually got the volume heavier. So not a bad time to be unhedged. Well done there. Now, are there other things that you're looking at here, Jim, in terms of things that are making you bullish?
Well, yeah. I mean, we're in a little bit of a stammering moment where Lilly came out, and then I think everything was waiting for NVIDIA. Kind of like the market went dormant before CPI, PPI. So PPD tried to come out, Lilly tried to come out. Both look phenomenal. I think now we have the NVIDIA number out of the way, the market can go the direction it's supposed to go. Look, I'm really bullish. I mean, more so than normal. You have to remember, we just finished one of the worst growth bear markets in history. Not as bad as 08, 09, not as bad as 2000. But if you look at net new lows, this was one of the worst growth bear markets I've ever lived through. And I've been doing this for like 35 years. We are just emerging. We're just barely into this thing.
Yeah.
So I'm super bullish. There's a lot of leadership. Now, Arusha made a very accurate statement. There are so many names, it's hard to discern, you have to discern which are the leaders, but it's not so broad. It doesn't remind me of other bull markets where the breadth was unbelievable. Okay. Like the mid cap is working, but the Russell 2000 is sitting right up at the top by its pivot, and it's not out. Yep. So we have more breadth than we did when the NASDAQ bottomed initially, the absolute low. There was no breadth. It was all Mag 7. Come November, it broadened out a little bit more, and now it's broadened out a little bit more, but it's not. Yep. Imagine how much we could make, or how good it could get, or how easy it could get if we got the support of the lower quality, lesser names to get wind in our sails, which I do believe is coming. I mean, you got to remember, we just had a silent Fed tightening from 7 cuts to 1 or 2.
Right.
It was like a silent, no action. The Fed tightened. That's what happened. So now also, if we do have a recession.
Well, was it the Fed in action, or was it investors kind of having to adjust their expectations a little bit? I think the expectations got a little ahead of themselves.
Or a little bit of both, right?
Yeah, that's true.
It's always that kind of fine balance in that, right?
Yeah. We've got a total split economy. You have the technology AI sector, unbelievably robust. And then you've got like the transportation stocks like XPO and SAIA and UPS signaling trouble. Yep. And then you've got XLP, right? Is that the
XLP is like, and the super, it keeps improving. But, and to go further into that, because especially like in retail and consumer, we're seeing that split economy too, right? Because a lot of consumers are under pressure, and that's kind of going underneath the surface here. But there are a lot of those kind of newer restaurant stocks that have been working well. But then we saw some earnings reactions today, where, like, for instance, we were just looking at this before we started the podcast. Williams Sonoma, it had this nice gap up in the morning, and it looks terrible by the end of the day. So when you start seeing some action
Yeah,
like
I was looking
this,
at that and I was almost like, is that real?
yeah. I mean, I was shocked at how bad this looks right now. It looks like a propeller. It looks like a plane with like the repeller spinning, right?
It's exactly what
Yeah.
it looks like.
But
More like the propeller on Indiana Jones, and we
Yes,
all know how that
exactly.
that one went, right? Sky up.
So Jim, but when you see some action like this, because we saw a few of these kind of reversals, how do you take this daily action into account versus kind of the longer term action where we are in a power trend? The number of these growth stocks, AI stocks, are acting well.
It's sector specific. I mean, Toll Brothers got hammered. I think that's possibly why Williams Sonoma, started to deteriorate. That's a big signal. That is a massive gap up reversal through the 50 on crazy volume. That's a sell. Okay. I mean, at least it's a major trim at the least. But again, other areas of the market like Vertex and Pinduo tried to come out. Lilly is coming out of a beautiful base.
Yep.
I mean, really nice. So it's a split environment. And, but again, if we do slow down economically, the Fed has bullets. Short rates are 5%. The Fed could cut, theoretically down to 0 again.
Mm-hmm.
And don't be shocked if they do, because they have to devalue the dollar. There's just no getting around that. I mean, whether they devalue over 5 or 10 years, or they, look, you think BTC commodities are rallying, housing is robust as can be, because I mean, hard asset, gold. Hello. I mean, something is going on here.
Okay, so I think what we're going to have to do is we're going to have to put a pin in this. We're going to take a break, and when we come back, we're going to talk about the commodities. How not all retail stocks are created equally, and a lot more. So stay tuned. We'll be right back. Okay, we're back on the Investing with IBD podcast, and of course, we've got our special guest, Jim Ropel, joining us from Ropel Capital Management, founder over there, and also the creator and brain mastermind of the Ropel report.
Look at that! Wow,
I'm about to
and look, I mean, you put a lot of thought and hard work into that. I mean, it definitely shows. And I gotta say, you're one of the people that when you write exactly how you talk. It's just I can't read the Ropel report without doing it in your voice. It's just you can't do it. It's impossible. I dare anyone to try. But let's get right into what we were talking about, because you were talking about how there is a little bit of the sector moves, happening unequally. But even within the sector, okay, we just looked at Williams Sonoma, WSM, horrible day, Walmart, and Walmart was one of those double bottoms. But gosh, I can't tell you how many double bottoms I saw that were like, is it a double bottom or is it a flat base based on the depth? These double bottoms that were 10% or less. Like, how often do you see that in a double bottom? So you had Walmart that's looking great, but then you have Target that it comes out with earnings and it was already in a downtrend. Doesn't look great. You've got Lulu on the apparel side. That's not looking great. And then you have Abercrombie and Fitch.
Or even Ulta, right?
Yeah. So I mean, there just really seems to be this dichotomy. It's like, if you want to say, oh, retail stocks are doing great, you can choose which ones you want to look at and you'll be right. And if you want to say, oh man, retail stocks are getting hammered, you can choose and you can find some that are doing really bad. So how do you make sense of that when they're so different?
It's kind of like you have to follow the new high list. Whatever sector, like, if dairy stocks are rolling, you have to stay with that sector of the market. I mean, it's bifurcated in retail. By the way, this Abercrombie and Fitch chart, the left-hand side is so erratic. I think this is flawed. Now, the stock could cleanse the sins away with some kind of crazy explosion up, but the left-hand side is way too erratic for me. And with so much good merchandise to go after, I would absolutely pass on that. I mean, I think Bill would look at that and go, oh, it's too loose on the left side. Now, it tightened up, and it also has had a tremendous run. Doesn't mean it can't have a much further run, but I just don't like it. I Blink, Malcolm Gladwell. I have
Right.
a bad blink look at that.
Yeah.
Well,
Actually, anecdotally, I will say that I did an unofficial survey of my daughter and her friends, asking like, hey, what do you guys think of Abercrombie and Fitch? And they were like, you know what? The jeans completely caught us by surprise last year, but
in a good way.
everybody's kind of knows about that now. It's not a surprise anymore. So I'm like, hey, thank you for that. I mean, it was decent stock analysis there. I mean, she wasn't even looking at a chart, but what were you going to say, Arusha?
Well, so the Abercrombie and Fitch chart reminds me of what Elf did last year. We had that really strong move, couldn't break the 50, then finally broke it, formed a new base, and was able to have another run, a decent run, not nearly as strong as the other run. And then after that, at least with Elf, it looks like it might need some more time off. So that's kind of what I'm looking at with Abercrombie. Maybe, you want to keep an open eye, and maybe it does have a little bit more room left. We'll find out next week when they report earnings, it looks like. So that'll probably tell us a lot. But some of these charts, when they're just so strong, they might have a little bit more momentum to go.
Mm-hmm. Yeah. Jim, what about commodities? Let's talk a little bit about that. I mean, you've been pounding the table on gold for a while as the Mona Lisa of of cup with handles that you can look at on long-term charts. And man, commodities got kind of hit today. Whether it was gold, oil, the metals. I mean, copper was
killed,
just absolutely killed. Absolutely. So and again, I think this speaks to a larger part, what you were saying earlier. Look, sometimes in a trend, you're going to have a bad day that doesn't kill the trend. But when you have a day this bad, does it kind of shake things up a little bit for you?
I call them Mother Teresa or Gandhi days. Mother Teresa was uber virtuous. And one day she walked into a 7-Eleven and cursed at the counter person behind the counter for no reason, but she remained a virtuous person. The stocks have bad days. And if you're so jittery that you're going to flip, this is nothing like Williams Sonoma.
Yeah.
One day it was a little extended. It's just fine at this point. Now it could deteriorate and get more ragged, but we're nowhere near the measured move target, which is just a target. But, commodity cycles don't last for 3 months. They historically will last for years. I mean, if you go back to GLD and you go back to the early, when it first came out, look at the monthly.
Yep.
I mean, look at that it's like what is that?
It's like 5 years, 6 years. Yep.
So, I mean, we just came out of what I call the Mona Lisa of bases, and it's just emerging.
Can you describe that measured move target that you just mentioned?
So it would be the low of the cup to the high of the handle. That price, it's roughly, I can't see it, but it's roughly 890 points. You would add 90 points to the high in the handle. Some people use it's a loose target. So you would add that 90 points to the top of the base, and that would be a measured move target. Now, that's a possibility. Like the S&P right now has up, I think the S&P's measured moves about 55, 600. Okay, so we talked about, I'm skipping around a lot. We talked about the snafus. Very short term, we have a little bit of turbulence, but that doesn't mean anything. The long term here is we just emerged out of a terrible bear market. And so measured moves, I think, are pretty good targets. But if something goes sideways, you have to throw that out the window.
You have to be able to change. Right.
And you touched on something there about, these are a little bit longer term, right? And going back to Bill was always looking at weekly charts to remove some of that daily anxiety that can, that can happen if you're looking at daily charts, or heaven forbid, you start going further down to those intraday charts.
Dude, I think it's so important. I think there's so much short-term pivot point and this stock and that stock. It's like, turn off your computer and start to read about what you own and the total addressable market over the next year and a half. And that will stop you from flipping when some institution dumps 300,000 shares of your favorite stock and it intraday hiccups, or it hiccups over 3 days. And you're like, well, yeah, but the total addressable market is huge and it's still above the 50-day. I mean, that's how you get shaken out. is if you don't understand the fundamentals. If you don't understand the fundamentals, you're not going to be able to sit for 4+ beat and raise quarters.
Mm-hmm.
And Bill's
Well,
right.
Yeah. Now, okay, to your point in terms of kind of recognizing that total addressable market, let's address the elephant in the room, because AI is definitely one of those, okay, what is the addressable market here? Like, and what could this do to change productivity? What could this do? You know, we've I mean, everyone's kind of heard this could be the internet of our times, and you know what it does for companies and everything in terms of productivity. And of course, we have Nvidia earnings today. So those Nvidia earnings are out. I'm looking at right now, it looks like Nvidia has broken above 1,000.
Right.
They've announced that they're going to do a 10-for-1 split. Oh, Jim perked up. Yeah. So it's trading above 1,000 now. And you know, it's got a a 10-for-1 split that they've announced. You know, this was kind of, a lot of folks were waiting, you know, for this, because it was like, okay, do we want to be too heavy, you know, in case this, you know, doesn't go well? You know, the whole idea of hedging into earnings. Are you counting your money? You never count your money when you're sitting at the table, Jim.
I don't. First of all, I had a mini bear spread on about
Okay.
55% of my. Where is Nvidia trading right now?
It's a
So
1,001.
you had was it a bear put spread that you did?
Yes. Yes.
Okay. So a bear put spread.
I didn't want to give up the upside.
Mhm.
I was,
So, maybe Justin, maybe explain the bear put spread.
Yeah. So basically, what you're doing is you're buying a put, right? And it kind of, yeah. So with a bear put spread, you're buying a put, and then you're also selling a put, right?
a lower
So
strike.
yeah, yeah. And so you've kind of got a range, you know, and if you go above the range, then
The whole thing.
you're going to expire worthless, you know, and you're going to lose everything that you paid for it. Now, if you go below the range, then things work out a little bit better for you. So why do you use a bear put spread as a way of hedging?
Because I don't want to give up the upside, and I also don't want to pay the time and volatility decay.
Mm-hmm.
Okay, so I have my lower strike put is burning probably faster than my at the money long put.
Mm-hmm.
Okay, so the you know, the big problem with options is you're fighting time and premium decay.
Right.
So I didn't eliminate it, but I dampened it significantly. Now listen, the whole thing is burned out the window. I mean, again, we'll see what the real trend is if it can close good on Friday. Like the market takes time to absorb monster big news. Now, if this thing, I can't see it back there, but it's kind of like PPI, CPI. The market won't really tell you for sure. The initial move is often
Right.
not the real move. It generally will resolve itself in the direction of the trend prior to the pause. So again, stock splits, you know, in the 2000 crazy bull run, stocks would announce a split and they would rally right into the day.
Mm-hmm.
So don't be shocked if, I mean, again, I have to look into this. I can't see what's happening, but don't be shocked if Nvidia goes to 1,200 shortly. If this is doing what you're saying it's doing.
Yeah. Well, and so like Baidu, I think was one of the first to do a 10-for-1 split, because and that was in 2010 or 2011, around there, because we were all like asking around, like, does anyone remember? And then it ended up working pretty well and continuing its run. And so it doesn't necessarily mean, where it gets more troublesome is if they keep doing stock splits, right? It's that multiple stock splits that can then start making the stock a little too top heavy.
Well, yes, but then, you know, what kind of happened is stocks just stopped splitting, right?
Yeah.
I mean, that was what was happening kind of before the 2000s. And look, there was a good reason for it, right? I mean, you know, we used to have to trade in round lots. Otherwise, you paid a much higher commission, a round lot being 100 shares. So there was an incentive to split your shares, because it made it so that people could buy those 100 round lots. It just made it easier. Now, you know, I'm not going to say that splits don't matter at all, because it does matter for the options market. You know, it's certainly a lot easier to hedge with options with Nvidia if it does a 10-for-1 split than, you know, when you're looking at $1,000 stock and you're trying to say, okay, how do I, one contract. I'm not ready to have 100,000, 100,000, commitment to NVIDIA. So yeah, it definitely kind of changes things there. But yeah, what do you think? Are splits as meaningful or important as they used to be, Jim?
Well, yeah, I believe they are, but you have to name another stock that's split. It's the first probably in a long cycle of splits. Like when you in the top of 2000, there's things were splitting all over the place. This is the first one. It's a big one, and it is a big split. 10 for 1 is a big split, but I'm not worried about this. It's not like it's irrational exuberance.
Yeah. I mean, you had Google. What was that? Was that a 20 for 1 that Google did back in
I don't remember.
2022?
Can't remember.
Amazon wasn't that long ago.
Amazon?
That was a 20 for 1, I think, as well, right around the same time as Google. Yeah, you have had them. And I mean,
oh yeah, there's a 24-1 for Amazon right here.
Yeah, and I think Google was right around the same time.
You kind of started down this path a few minutes ago, and you said, "Where are we in this cycle?" If you pull up Cisco on a monthly, so Cisco. I think there's a great comparison between the two because Cisco was just imagine the world before computers were standalone.
Yep.
And then they networked them together, which was the foundation of the build out of the internet. And it peaked right around 2000. Is it $65 a share? Now people are going, but NVIDIA's already been going for a decade. Well, the deal is they're huge in automotive. They're huge in video games and other areas. Like the internet and AI started for them 2 years ago. So if Cisco went from 6 cents to 65 off of a revolution in innovation, I think NVIDIA has way I think you can't start counting from the day NVIDIA came public. You have to start counting from the day that AI was relevant to their earnings. And I say it's the most important company in the world. Okay, as far as innovation. Amazon's the most important company to me as far as gauging economic sensitivity, but as far as innovation in the most important sector of the economy, the rails of technology, internet run on NVIDIA, on semiconductor. And look at Taiwan Semiconductor. Look at CLAC, or just look at SMH. Look at how beautiful SMH looks right here.
Yeah.
Yep.
I mean, when I see bases like that, and then the digestion, and it comes out again.
Yep.
We're set up here for a whole nother run.
Yeah. So right now, NVIDIA's up 6% at 1,013. So let's see. So yeah, I mean, it's going to be a
and I
breakout.
should disclose at the beginning that I do have a position in NVIDIA. I think I think we can guess that you have a position in NVIDIA as well, Jim.
I am drowning in NVIDIA.
Right. Okay. And I do have a position in Taiwan Semiconductor as well. I have a position in SMH. I kind of my biggest is NVIDIA. That's the biggest in my portfolio. Right.
Can you pull it up? Or you know what? I'll just look at the earnings. Can you see the earnings block on NVIDIA?
Yeah, let me pull it up. Yep.
I mean, if anybody wants to go what would Bill own? WWBO. What would Bill own? He would own the liquid leader with the biggest earnings. The magic elixir is giant earnings with crazy liquidity. Bill, I don't know. I'm going to have to guess this would be his biggest position. And I have to say, those numbers are staggering. This is going to go down in the Hall of Fame, first ballot Hall of Fame winner for TML. And just one other issue. People like, they're talking all these junk stocks with no earnings. How can you have 4 beat and raise quarters if you don't have any earnings? And then people go, well, what about Amazon? It didn't have any earnings for 10 years. I'm like, well, Lloyd Benston to Dan Quayle, you're no JFK. Okay. You are no Amazon. Amazon is a once maybe in a lifetime stock or more that it would go that long and reinvest in the company. This thing is so obviously the leader. It actually, the valuation, and I never look at valuation, but it's gone down.
Yeah,
it's growing so fast.
Yeah.
It's gone down a lot. Yeah, it's gone.
And when you say valuation, are you talking about the PE ratio?
I don't even know what that is.
Right. Okay. Okay, so to kind of wrap up, I mean, okay, Nvidia earnings. And I mean, we're taping this on Wednesday. The market's going to open. We don't know how it's going to open. Right now, we're getting the indication that it could be good, but we'll have to see. Tomorrow we'll have to do 2 takes of this, so we can say, oh man, that was short-lived. But I'm just kidding. But does that kind of wipe away the short-term snags that you were talking about? All of these little bothersome things. I mean, are those more gnats and fleas as opposed to larger pests, I should say?
Yeah, 100% correct. The major innovation cycle is as healthy and thriving. Well, you have the consumer struggling, but you have to realize this technological innovation is deflationary. Okay, so if this really meets its promise, I mean, look at the CapEx spend. Was it Microsoft or Facebook that just said they're going to go from, just think about this, it was Microsoft, 25 billion to 35 billion this year.
Wow.
I mentioned you're at the payroll department at Microsoft. Yeah, send NVIDIA 6 billion, 10 billion. Think about that. That's got to be the biggest wire transfer ever in history.
Right.
Okay, and this is in the area that matters the most, and it's deflationary. So you do have the trucking stocks, the short haul, less than full load stocks getting hit. I really think the golden goose is ripping. I mean, the golden goose is working overtime here.
The goose is loose, Jim.
The goose is
loose.
Yeah. Well, okay, you mentioned deflationary, and speaking of deflationary, you kind of hinted at this a little bit in terms of rate cuts, just in terms of debt and everything like that. Let's talk a little bit about crypto currency, because I want to kind of include that. How are you looking at cryptocurrency? I know we all already got kind of bullish sentiment from you, but if we want to go Super Bowl, what do you say about cryptocurrency right now?
Okay, so in the Rothel report, it's all by it's all different sections. The last section was crypto.
Right.
I last week took it and put it at the very top, and it's now the first, because I feel the short-term opportunity is bigger than it is in equities. The halvening is now behind us. We've had what's historically a normal digestion, and can you pull up Arusha? Can you pull up?
I have Binance up right now.
Okay, hold on. This is, I mean, it is a little straight down the left, flat across the bottom, but we are in a monster cup and handle here.
Okay. And this is the daily chart, just zoomed out like a couple of years,
for what?
Right? So you can
3
see
years,
this monster.
4 years.
Yeah, you can see this monster kind of cup with handle.
If this thing makes a new high, it's off to the races. I mean, this looks better than BTC. It looks better than Ethereum. And by the way, the world changed 2 days ago. Washington, super anti-crypto, flipped. Somebody tapped Gary Gensler on the back and said, hey, let's get with the program here. Washington is now pro-crypto. When Trump came out and said, we have to keep crypto here, the Democrats said, look, we can't let the Republicans run with this issue. And all of DC, now they took crypto out of the voters. It's not a central issue.
Wow.
Okay. They're both pro. So then the SEC says, let's work at getting an ETF for Ether, and Ethereum explodes higher.
Right.
Well, the problem with that is staking. It's going to be very difficult to stake in an ETF. So it's going to be a flawed product, unless I don't understand they're going to somehow work that out. But it's going to really drive people. If you want the raw coins are the real deal. And I'm segued way away. The chart Arusha is showing you, if you could just go to a daily and look at the handle here, it's kind of like a pennant. And look at how tight it was the prior week before that move out of there.
Mm-hmm.
I'm dealing with Galaxy. They're building me a derivatives contract. If this comes out the top, I am going long here. That looks fantastic. And even Coinbase, I don't love Coinbase. Look at MicroStrategy on markets, or on MarketSmith, on Market Surge. I don't love MicroStrategy because I don't want to fight the premium discount situation like a closed-end ETF, but the chart looks phenomenal.
Yeah.
Right.
I mean, look at the daily.
Yeah, it's
I
you
mean,
have the
guys,
ants.
I
Yeah,
mean, look,
yeah.
crypto is, well, it looks to me like it's about to go, and it's not going to be any. No one, when someone goes, well, the numbers post halvening are so big, I don't even want to say them. Okay.
Mhm.
But if this thing goes up 100 or 200%, like nobody's going to go, how did that happen? Like, I'm shocked. There's no precedent for that. I mean, the whole space is building out. It's just like the internet. I was at Morgan Stanley when the internet was built out. I was in all the IPOs. The roadmap for AI and blockchain are very similar, and it's all unfolding. Even O'Neill and Company. I used to talk to Dean Kim. He'd come in my office to find it, and I go, "What do you think of crypto?" He's like, "We don't cover it." Now there's a weekly piece.
Right.
Wisconsin State Pension Fund just announced a $100 million position in BTC G whatever, one of the ETFs. This is the beginning. We're so early in this, and if there's so many applications here. There's the government debt to GDP ratio, which is out of whack by any measure. That's why BTC and maybe hard assets are going. But then there's the utilization of like the applications that are being built out. Like when the internet was built out, you had the plumbing infrastructure, then the applications, then the utility, and that's all happening in both of these areas. So what could happen here? You have the worst bear market in like third or fourth worst bear market in history, as far as I can study. And then you've got these monster innovations coming. The Fed may have to ease here. If you start to see the consumer non-durables continue to go up, we get a little slowdown. Dude, this is a big fat pitch.
Yeah, very good. Well, we'll take a break right now, and when we come back, we're going to talk a little bit more about some individual stocks that are on Jim's radar, and we hope you stay tuned. We'll be right back. We're back on the Investing with IBD podcast. Justin Nielsen here, along with Arusha Paris. And of course, our special guest, we're calling him the Golden Goose Whisperer for the Golden Goose of Capitalism. He's the founder of Ropal Capital Management and, of course, the creator of the Ropal Report. So look, when you talk about the Golden Goose of Capitalism, Jim, you're usually, USA, rah, rah, rah. But okay, we got to take a look at China, because I'll be honest, I had China in the penalty box for a long time, whereas like, I don't want to touch it. Why would I even put myself through that stress? But you were talking about how you have to kind of listen to follow through days. What was it that you saw in China that kind of changed your mind a little bit on the country, or I guess the investing possibilities?
Okay, so I love geopolitics because I'm a total introverted dork. And I was
yeah, every time you say introvert, I just
when I think of Jim, I think introvert. Yeah.
I'm watching Peter Zeihan a lot and a lot of geopoliticists, and they're like, the demographics, the country's going to cease to exist, and they're authoritative, dictators, and they're unfair human rights, and the market's imploding, and their debt 32, like it makes our debt look like nothing. And all of a sudden, we have this monster follow through day. And I remember Bill around the Gulf War, the first one. We had a follow through day, and at the exact same time, the U.S. government had ordered 40,000 body bags, and the elite Republican Guard was the third largest standing army in the world, and it's going to be the mother of all battles, and off it goes. At the dead bottom, I was more bearish on China than I was on the market when we were going to war. Mm-hmm. But Bill would say, he would call me. He called me on follow-through days. He'd be like, "What are you buying?" I'm like, sometimes, you gotta buy something. And so anyway, when it is so dark, those follow-through days tend to be the best, because their market is so sold out because all the news is known. And what happens? The market knew. All of a sudden, China, POCB, comes out and says, we're going to stimulate the heck out of real estate market. And they're loosening red tape, and they're doing all these things to really ramp it up. The market knew that. And then, what the issue for me was, the market was so beaten up. There was almost nothing near new highs, and there's a lot of less than awesome accounting standards there. But EDD, I've been all over it for a couple years because the numbers are so good. And They have the Temu platform, the new retailing concept. And then they reported earnings today. I went into this unhedged, which this whole earnings season necessitated hedging because of the minefield we were in. But the market turned. So anyway, the lesson is when something looks just uninvestable and then you get a follow through day, that is a must go to, but it's so difficult.
Yeah. The emotions just that's what you have to fight, right? You have to fight those emotions. And that's why, I mean, just to go back to this, because it's something we talk about a lot, is that's why you have to have rules in place. If you don't have rules in place and you go by, oh, this is how I feel, or this is what I'm thinking, because you can certainly think too much about it and come up with all sorts of reasons why you shouldn't. But if you're following rules, it kind of forces your hand. And again,
even
it's
if you have the rules and you're following them and you're buying something, you're still terrified at that point,
right?
It's not like you're like, oh, those emotions. You're like scared, but it forces you to buy something, and it's even that little small purchase. If you have something in, and you start to see that work, it's amazing what it does to your psychology.
Absolutely,
right? You just start seeing slowly work. It gives you confidence, and if you see another stock breaking out or starting to move up, you're willing to put more, and that's where the market is slowly pulling you in.
Yeah, it's a feedback loop, right?
Exactly.
And look, that happens with emotions. I mean, look, we went to the Pearl Jam concert, but another band I used to listen to back then is 9 Inch Nails. Hey, if you want to get depressed and put yourself in like an anger spiral, they literally had an album called The Downward Spiral. If you want to really mess your head up, just listen to The Downward Spiral a bunch. That'll do it for you. And I mean, again, when things are good and you kind of look at the things that are good, that can also put you in an upward spiral, right? Things are working. The markets, you listen to Jim Ropel, it's hard not to get bullish. And then you get some stocks that are working in your favor. It can really change your mindset. So anything to add on to that, Jim? Since we just took our little music,
what could go right? What could go right?
Yeah.
Mealy, Argentina.
Yeah. Mercado Libre.
We have Ronald Reagan with a chainsaw who has taken a country that's a basket case and he's righting the ship against, I mean, the public is with him. They're taking deep cuts in pensions. He's just a massive conservative, and he's basically bringing the golden goose in the free market, and he's doing all the right things. And look at that. Is it? I can't see it.
That's Mercado Libre.
Yep.
Mm-hmm.
Boom. And that's not even Argentina specific. That's not.
So we can take a look at ARGT. Of course, I think Mercado Libre is the largest holding in ARGT, the MSCI Argentina ETF. I think it's like around 14% or something like that.
What could go right? What if this spreads through Latin America? What if the other people get like the worst thing that a communist could ever have is TV, and then the people can see what's going on with their virtuous cycle of capitalism in other countries, and they're like, I want some of that.
Yeah.
What do you mean across the border in Argentina they're doing that? This could spread. Mm-hmm. What if that happened?
Yeah, and then you basically have all these little pockets of U.S. type opportunity elsewhere. And I mean, look, when you look at some of the global charts, and you kind of think of, could this be like investing in the U.S. back in the 1900s? And some of those big moves, monster moves that we have, could you get those internet 90s type moves and some of these growth opportunities when the economy is and for some of these countries, that's getting like the infrastructure in place, right?
Yeah.
The
you've seen that in India.
Infrastructure.
Yeah. They're going through like the 90s right there with those charts. Those are super strong charts.
India is off and running and very understandable. But Romania, if Russia wins in Ukraine, they're most likely to invade Romania next, and Poland after that. Look at those charts. They're in all-time new highs. Mm-hmm. How possibly could that be? France has boots on the ground in Ukraine, yet the bordering countries' markets are making all-time highs. I don't know what they see, but I don't fight trend. Mm-hmm. That is something I don't know how these markets are signaling positivity, but they are, and it's absolutely defies logic.
And in the end, though, as Bill always used to say, the market is always right.
The market price is right. It's more important than volume by, I say 55-45, but there's a lot of conjecture about the validity of volume these days. But I would point to Lilly's volume when it came out 2 days ago. Was it yesterday?
Well, yeah, and that was news based, right? Because they had to think, was it a phase 3 on Crohn's disease treatment that came out with very positive results, if I'm not mistaken. And I do have a position in Lilly, so
As well.
but I believe that's what it was.
Yeah, but I mean, look at the base. The base
Yeah.
that it's coming out of was saying something good is, well, it could have broken out of the bottom of the base, but that base was too darn good, and we're just emerging out of this bear market. I mean, I was pretty fired up about that.
Well, now kind of getting back to the retail side, and again back to the US, how important is kind of Amazon in terms of as that bellwether? Talk a little bit about that, maybe.
Well, they're the largest retailer. They're bigger than Walmart, and they have AWS, which is the largest data center in the world. And so you have the temperature of the consumer and the temperature of the AI. I mean, not really AI build up, but just general technology and the advancement of all of technology. Those are the two most important leading indicators, I would think. And so are you looking at it right now? Yeah.
Yep.
Oh, I just see like a multi-year giant cup.
Yeah.
I don't know.
There you go.
That looks interesting. Maybe that might.
I will go to the monthly chart
It
and
was
see
written
it
by
even
the
better.
guy who talked about this thing called Cup and Handle.
Yeah. Here's the monthly chart of Amazon.
Yeah.
Oh, geez, I really don't like that pattern. Looks bad. No, I mean, come on.
Well, I'll tell you one quick thing during my trips and visiting clients and stuff like that, and institutional clients. Right, one of the clients, really big time investor, managing tons of money. When we met with him, we pulled up a ton of charts, and he wanted to look at them on monthlies. And like looking at, and it's like there's another new high, there's another new high, there's another new high there, and it was really interesting because you saw a lot of these stocks just breaking out of these kind of cup with handles, kind of like Amazon.
Well,
Right?
why don't you look at them? Look at Microsoft. Look at
Yep.
Netflix after missing.
Yep.
I mean, these names are coming back. I mean, guys, we are in a bull market here. If you don't see a bull market here, you need to go back to technical analysis school.
Right. And
I do have some shares of Netflix, by the way.
you know what? I'm still sitting on this
Tim-
one
Tim's getting
share
us
for
in
my
trouble
wife.
here.
I've been playing in and out myself, but I've had this one share of my wife's since since 200.
Oh wow.
Roughly.
Wow.
Literally. Because I refused to buy it there, but she's like, I want you to buy me some Netflix, when it was way down there.
And
I'm
with Netflix, maybe this is with they have the DVD, they have the streaming,
Huh?
original programming. Now is it live TV?
Right.
We'll find out. But
well, in addition, there's certainly the ad, the ad revenue,
And the ad
that
revenue,
model
right.
as
Look
well.
at Trade
The
Desk.
international, let's not forget that international market that they, that was leading a huge expansion for them
That's
for a
true.
while.
Yep.
So I mean, it reminds me of a little bit of Corning, how they constantly were reinventing themselves. Corning was like, hey, Thomas Edison will make the glass for your newfangled light bulb invention. That's great. And then they're like, hey, you know what? We could make cookware with this. I mean, I had Corningware in college that I used. And then they're like, hey, you know what? If we stretch this glass out really thin, we've got fiber optics, baby. And they just kept on. What can we do with glass?
Yeah. That's a good analogy. Yeah, because Netflix has been reinventing themselves now for many years.
And certainly the leisure, there's definitely, it's been one of, Bill O'Neill's favorite areas because yes, there are those companies that kind of change the way you work and, the productivity for the business. But hey, we like entertainment, as well. And there's a lot of the entertainment type companies. And look, also convenience things. So let's talk a little bit about retail restaurants as well, Jim. Where was your latest field trip? I saw some pictures that we're taking a look at.
So I went with a bunch of people that you guys all know. Everybody listening knows.
They've been on the podcast.
So
Ebobach.
Yep.
Who else?
Eric Kroll.
Eric Kroll. He's been on the podcast.
And so we went to Cava,
Mhm.
and it was the second visit I'd had to one, and the place was mobbed. There was 50 people, between 35 and 50 in line the whole time we were there.
Wow.
My friend lives 2 doors. This is kind of almost in the city, in Chicago, and he said it's been like that since the day they opened.
Wow.
And look at the metrics. Well, first of all, let's go to the management. Aubon Pan, the guy was the CEO of Aubon Pan, then Panera. So this guy understands operations, and he's been extremely successful. Now the board of directors, I'm sorry, he's chairman of the board. He has been buying stock in the open market, and I think management owns maybe 13% of the outstanding right now. Sales growth, earnings growth, store count is growing about 15% a year, which is extremely high for restaurants. And it has, the book, The Blue Zone, is about Mediterranean food, which is very popular. The
Mhm.
food tastes great. It's a little spicy. And we did have little comments. It was some of the wraps or the pitas were a little oversauced, but man, the food is great. And it can be healthy depending on what you order. It's super unique. And I generally dislike IPOs, but this one just has it has everything. It's pretty much template.
Yeah, and I should say I do own shares of Kava, and I also eat at Kava.
How
I'm
often?
also a client.
How often do you
I
go?
do have shares as well. I have not eaten at Kava yet, so
Yep.
I'm going to have to do
Yeah,
my own
maybe
little.
every couple of weeks. Yeah. So yeah, Justin, we should have gone to Kava yesterday when you were nearby.
Oh,
Yeah, we
yeah.
totally should have done that. Yeah. We
Next
missed it.
time, hey, do you want to go to the Pearl Jam concert tonight? We could,
Yeah, there's one right.
we could
There's
try it.
top over. Yeah, we'll go.
So with Kava, again, I usually think, and I have shares as well. I usually think of the retail restaurants when you're looking at those. I mean, I think of your expansion. That's where you really can get the huge amount of growth. And I owned Chipotle back in that 2010 move that it had, and I was like, oh, and it just seemed like they were always opening stores. Does Kava have that kind of expansion runway that they're looking at?
I don't think they have that big of a market. I mean, the Latin American population is much bigger. I mean, salsa outsells ketchup. Okay,
Wow.
fact. But Arusha, you said you go to Cava. How often do you go to Chipotle?
It was interesting, and I've heard this from other people, but I mean, I would go to more Chipotle more than Kava, which is why I agree with you. I think it doesn't have as big a TAM as Chipotle, but what I've started here from, and it's anecdotal, but from younger people, they would just alternate. They're starting to alternate between Kava and Chipotle, and I thought that was really interesting because there was a point a few months ago where I was doing the same thing.
Mm-hmm.
Dude, I see that totally. Like, if we had a Cava here, I would probably go to one or the other every week, one lunch a week.
And some of the younger people are doing it lunch at Chipotle, Kava for dinner, or Kava for lunch, Chipotle for dinner.
Young people don't cook.
Mhm.
They eat out and order in. They DoorDash everything.
Yep.
But if there's 3,300, 3,400 Chipotles, and if Cava can do half as good, and there's 3, 4, 500 stores.
Right.
Well, if they're going to go to 1,500 stores in 4 or 5 years, like, does it have to get as big as Chipotle to make a 5-bagger?
No. Right. Yeah.
So I'm chill.
Mm-hmm. Yeah.
Look, if the earnings weren't there and the chart wasn't, relative strength 90, whatever, I'd be like, it's not working.
Yeah.
But it is.
Mm-hmm. Yeah. So, gosh, I think you've given our listeners a lot to think about, and again, hopefully they can kind of sense is it fair to say you have kind of a bullish tone? I'm not sure if I caught that.
Yeah, I think he's pretty calm actually today.
Right. I know.
Usually
This is
it's
actually calm.
I'm kind of impressed.
But in bear markets, I'm a bear.
Uh-huh.
I'm a trend follower. In the bear market, I'm like 95% cash.
Yeah.
Yep.
But we're not in a bear market.
Yeah. Yeah.
It's really easy to be bullish. I mean, what's the golden rule? Can you make money?
Mm-hmm.
Prior to November, it was pretty darn hard.
It was hard.
Yeah.
Right. Now, all of a sudden, Can Slim is in gear. This is the time for me to open up with, for me, a big position and build it immediately. I'm not probing with 100 lots here. This is go time. You don't have opportunities like this very often. We are probably ending a secular bull market like this leg. When they finish building out AI and cryptos, like everyone has a crypto wallet in 10 years, we will most likely end the secular bull. So this is kind of maybe a big last push to really rock it and build up a massive war chest so you can just kick it in Naples, Florida when you're a little older and enjoy the sun. Because what if we don't have another, what if we don't have another revolution in technology like we have right now? I mean, by the way, BBH is trying to come out. We didn't even talk about medical technology.
Oh, yeah.
The advancements in cancer, gene editing, AI discovery of drugs.
Right.
Like, what if biotech decides to look at that?
Yeah.
Okay,
That's true.
it's threatening.
Yeah. No, you're right. Well, Jim, I think this just means that we have to have you back on.
Yeah.
I'm all about
round
it.
two.
How's tomorrow? How's tomorrow?
Right, exactly. Round two. We'll meet you at the nearest kava between us.
Well, immediately now I have to do Rollful report questions. So I'm like wall to wall here.
Okay. Well, we're going to let you get to that, Jim. Really appreciate you being here with us. And again, thanks so much for sharing your experience with our listeners. Always a pleasure, buddy.
Dude, thank you for having me. I love doing it. Have a great day, guys.
Awesome. That's going to wrap it up for us this week. Thanks a lot for joining us. And don't forget to join us next week. We're going to have Simon Erickson back on the show. He is the founder of 7 Investing, and he's got some information that he wants to share on how he's valuing Tesla. Hope you join us for that. Thanks a lot for watching this week. We'll see you next time.